GM guys, okay, I'm sure you all can hear me now. Welcome to today's live stream, guys. Welcome to today's live stream. Okay. Welcome, guys. I'm sure you all can hear me. Welcome, guys. I'm sure you all can hear me. Okay, guys, welcome to today's live stream. Okay, I'll try to set up my camera so you all can see me as well. So, guys, on today's live stream, we're talking about fixing a broken plan, fixing a broken trading. I don't know, I'm not in a very bright area, so let me see if I can find somewhere brighter so you all can see my face before we kick off. So, give me a minute, guys. Huh? About England. Come on, sorry. It's that side. Okay. I'm sure you all can see me now, guys. Yes? Okay, okay. So, welcome to today's live stream, guys. Like I said earlier, we're practically gonna be talking about fixing a broken plan. Fixing a broken plan. I hope it's not too noisy where I'm right now. I just hope it's not. Okay, thanks, guys, thanks. So, talking about fixing a broken plan when it comes to trading. Okay, as a trader, it's always important for you to have a plan Okay. Can you hear me better now? If you can hear me, please let me know. Hope my voice is a bit louder and clear now. So, in regards to what I was saying about today's live stream, we're talking about fixing a broken plan. Fixing a broken plan. So, fixing a broken trading plan is very important for you as a trader because when you don't fix it, it breaks you. And this requires like a brutal honesty, a structured evaluation, and timely adjustments, which would help you become better even while keeping to your trading plan. So, as a trader, when you trade without a plan, it feels more like you are just gambling. Like you practically in the market to play around it. You don't see it as a skill, you don't see it as a profession, you don't see it as a business. You just treat it as though it's a place where you are to try out your luck, and if it goes well for you, then fine. If it doesn't, then you're going to let it go. So many traders have broken their trading plans, and when does that happen? It all comes from uncertainty. When you're practically uncertain, you know um with your trading plans, with your trading rules, and all of that. So, before you venture into trading, it's always important for you to have a plan. And this plan comes from how you should approach the market. What strategy are you, building up to approach the market? How effective is this strategy? How valid is this strategy? Okay, that's number one thing. When you've been able to find this strategy that works, you've back tested on it, you've tried it out, and you think it's valid, and you can hedge on it, why risking your real money in the real life market and be confident with it. Then that's number one. You now have a strategy that works for you. You have something that you can be confident with while trying it out on the real life market. When you found that strategy, okay, now it comes down to you know knowing a few things you want to see in that strategy before you can open a trade. Let's say a trader who trades, for example, chart patterns. Let's say you want to see a bull flag, okay, or a bear flag before you can look out for your long or your short, or you want to see an inverse head and shoulder before you can take a trade. Now, if you see something that looks more like an inverse head and shoulder, but it's not practically an inverse head and shoulder, you wouldn't be confident taking that trade. Okay, so when it comes to your strategy, you know what your strategy is about. You know all the confluences you want to have in check before risking anything with that strategy. So all of those things have to be in check. You have to make sure they're intact, and that builds your confidence with your strategy. Now, having said that, when you now have a strategy that works, you know how to check your confluences of this strategy while applying it in the real life market. It now comes down to risk management. You must learn to manage your risk. It's a topic that always comes up in any topic at all you're trying to talk about in the financial space. Risk management, it's very very important for you as a trader, because regardless of how much you feel you know about the market, how much you think your strategy works for you, it still comes to a point where your strategy might fail you, not because you're wrong, but maybe because the market feels like doing what it wants to do that day. Remember, we're all there to speculate. No one controls the markets, okay? You're only there to speculate. And, while you speculate, just make sure you have a strategy that works. And while that happens, also maintain a good risk management plan towards your trading journey. So before I continue with that, let's talk about the symptoms of a broken plan. How do you spot a broken plan? Okay. Now, to spot a broken plan, it comes from you constantly losing money despite following your rules. Yes. When you're losing money while following your rules, it makes you feel like this is not working. Okay, this is not working. So your trading plan might be broken if you're constantly losing money despite following your trading rules. Okay, so you must try to figure that out. How do you fix it? We're going to come to that. And another way to spot how you might have a broken trading plan is you deviate from your plan out of frustration or boredom. Let's say, for example, you have $1,000 account and you've been risking $100 per trade and you've lost $600 already, $700 already. It brings about frustration. It makes you feel so tired about the whole thing. It brings up doubt, it brings up fear, uncertainty, and all of that. And then you see at that point, you wouldn't even be thinking of following your plans anymore. You just want to, risk it all. Whatever happens, it happens. So when you deviate from your plan, okay, you're going to face all of these things. And another way to know that you have a broken plan is you're emotionally drained or overly impulsive. Yes. I tell traders that one of the biggest nightmares of a trader is always losing. Okay. And when you're always losing, it reduces your confidence in the market, it reduces your trust towards the market. Okay. So it's very important for you as a trader to know if your trading plan is broken or not. And I've spotted how you can know if your trading plan is broken. Number one is when you're consistently losing money despite following your trading rules, you deviate from your plan out of frustration or boredom, you're emotionally drained or overly impulsive, or your strategy no longer fits the current market condition. Okay, all of these things are symptoms of a broken plan. They are the symptoms of a broken trading plan. Now, how do you fix a broken trading plan? Okay, how do you fix a broken trading plan? You see, during my early days of trading, okay, I came up with something I told myself that is very, very important for me to stick to if I have to be successful in this market. And that is something I call the 10 trade rule. The 10 trade rule. Now, what this rule does for me is that these are rules I've listed out as things I want to keep to while taking a trade. So every day, when I woke up in the morning, before I open the charts to look for setups or to see how the market has been, moving from a particular time frame, I always look at my 10 trades rule. I read it from number one down to number 10. And when I open the charts and I'm looking at those candlesticks, price movements, and all of that, I have my 10 trades rule up in my head. Okay. And I don't want to do anything outside of those rules. I try to keep to them. Okay. But most times you might have these rules and you're still losing. You might have all these rules and you're still losing. Now, it's practically going to come from two places which I can think of. One is your strategy, two, your risk management, three, your psychological and emotional state when you trade. You see, trading is more than what most traders think it is. Okay, your psychology plays a very huge role in you becoming successful with your trading career. Okay, your psychology plays a very huge role, but regardless of your psychology playing a huge role, your strategy also matters. Your strategy matters because, guys, trust me, if your strategy doesn't work, okay, whether you're a risk taker, whether you're fearful, whether you're whatever it is, for the fact that your strategy doesn't work, it's a big problem. So, first thing is to ensure that you have a strategy that works. And most traders are not patient with their strategies, okay? Let's say you learned a particular strategy and then you tried it out that day and maybe it failed you come to conclusion that this strategy doesn't work, I have to look for something else. No strategy is a holy grail. Okay, no strategy is a holy grail. The only thing is having a strategy that gives you a high win rate. Okay, a strategy that gives you a high win rate. Let's say in a maximum of 10 trades, if your strategy can help you win at least 7 to 8 trades, you're good to go. Even if you win 6 trades, you're good to go. And over time, you can look at those losing trades, why you lost those trades, and then improve over time. But if your strategy, while implementing it, you're losing, let's say, 9 trades, 7 trades out of 100, 10 trades. I mean, trust me, there's a big problem with your strategy. You need to go back and look at it very well to be sure you're doing the right thing. Okay, so guys, when you talk about a broken trading plan, most times it comes from frustration. Okay, let's say you've lost so much in the market, you feel so frustrated, you feel emotionally drained, and all of that. it's gonna bring about not even looking at your trading plan anymore. Okay, you practically just want to gamble the market, and whatever happens you take it that way. So when we talk about a broken trading plan, it's practically when you start feeling frustrated, when you start feeling emotionally drained with your trading journey and all of that. You see that you no longer look at your trading plan. If you're the type that trades, let's say, 2 times a day, because you now feel frustrated, because you now feel so pissed off with your losses and everything, you're gonna revenge the market, and it will warrant you to take multiple trades just to recover your losses. Okay, so when you see yourself in that state where you feel frustrated, you have a lot of doubts, there's no confidence, there's no trust, you feel fearful, you're so uncertain, and you're just running around different social media platforms trying to get opinions from different traders, trying to jump on different setups and all of that. It's a big sign that you've broken your trading plan. And how do you fix it? Fixing it comes about at least staying off the chart for a while. Okay, now when you stay off, it doesn't mean you're not going to open your PC, your phone to see what the market is doing, but it's in the aspect of taking trades. Okay, taking trades, you're going to limit how you often take trades, and you're going to try to put yourself together. You get a mentor, you go back to your research, you go back to studying, you go back to check your discipline, know why you've been losing and all of that. Okay, it's a way to come back to building your trading plan again, because this has been the problem of so many traders. It has been the problem of so many traders. Okay, you see them, they learn a strategy, and then they took their first trade, the strategy went well, they're going to be like, wow, this strategy is fire, like, man, I've seen the best strategy in this space and I'm going to make a whole lot of money. Now while implementing that strategy, over time you see that they become too confident and they start drifting from their plan. Okay, if they usually take 2 trades per day, they're going to take 5 trades because they want to trade every setup. Okay, and if they usually risk 1 to 2% of their capital, they're going to start risking 5, 10, 20% of their capital and all of that. And you see, when it starts going wrong, they will be frustrated, they will be drained, they'll be totally messed up, and you see them turning into gamblers and messing up themselves in the space, and they come out to tell you that this doesn't work. It truly works. Okay, it's all about you being disciplined, having a strategy that works, managing your risk, making sure that your psychology, your emotion are always in check, because all of those things are things that might seem like less priority for you, but they need much attention to determine your success in the trading space or in the financial market. So I want to hear from you guys, what are some of your challenges in trading? What do you think are some of your challenges in trading right now? Do you think it's your strategy? Do you think it's your risk? Do you think it's your psychology? Is it your emotion? Or you're still trying to, start up, or you're new entirely? I would like to hear from you guys. Feel free to share with me. What are some of your, setbacks in your trading journey right now? I wanted to share with me. Is it your strategy? Is it your risk? Is it your emotion? Is it your psychology? Just share with me, guys. Okay, okay. Mr. X said he thinks risk versus reward is a big challenge. I totally agree with you that risk versus reward is a big I totally agree with you that risk versus reward is a very big challenge. Now, why do I say that? You see, most times you might have a strategy that actually works, okay? But risk and reward becomes a challenge for you. And how do you fix it? Now, this is how to fix risk versus reward, okay? You see, when you talk about price action, okay, the market always has where it's coming from and where it's going to, okay, where it's coming from and where it's going to. And if you don't understand where the market is coming from and where it's going to, irregardless of your strategy, it might be kind of like hard for you to know where to place your stop loss and where to place your exit. Okay, because when you talk about risk to reward, It's practically about your entry and your exit. Now, you might have a setup in the sense that you know that BTC is about to go long, okay? You know where to enter the trade, no problem. But now you don't know where to place your stop loss, neither do you know where to place your take profit, okay? Now, I will explain how to actually do that in a very simple chart. So let me share my chart, guys. I hope you all can see my screen, yeah? Can you see my screen? Can you see my screen, guys? Okay, okay. So let me show you something quickly. Okay, I'm trying to share. Okay, guys. So this is my chart on BTC. Let me show you something real quick so that you can relate to how I deal with my risks, with my reward when trading. Okay, analysis on the 1 day time frame, but I'll show you how I actually, caught a trade on BTC that has been running lately. So it's a strategy I've always talked about. It's a breakout on a retest strategy. Okay. So currently the market has been in an uptrend for a while. The market has been in an uptrend for a while. Okay. So now I understand where the market is coming from. I understand where price is coming from. Okay. So now I know that the bulls have been in charge for a while. And over time, the bears are gonna come to take over the market because the bulls can't write price all along alone. There's always a point where the trend changes. Okay, so like I always say, the trend is your friend. The trend is your friend. Okay, so having that knowledge that the trend is your friend helps you, to be able to follow price movement for what it is. So on this particular setup now, the market is in an uptrend, moving, impulsively, giving us higher highs and higher lows, higher highs and higher lows. And then unfortunately, there was risk to reward, okay? Because your risk to reward is basically from your setup. But before it comes to your setup, you already have in mind what you're willing to risk for that trade, okay? But where to actually put the entry and to put an exit that will actually compound your risk is something I'm trying to explain now. So on this trend, you can see how price took out this higher low. Okay, so immediately price took out that higher low. Let me zoom. Okay, it's an indication that the bears are coming. There's a change in the trend. Okay, there's a change in the trend, and it's likely that the sellers are coming in. Okay, so now what I wanted to see from my strategy is the order block that initiated that break of structure to the downside. Okay, so here I say there's an MMS, that's a market structure shift. Okay, so I want to take an entry from that order block that initiated the break of structure to the downside, which signals that the sellers are coming in. So if I should take an entry at this point, okay, the question is where should be my stop loss? Okay, where should be my stop loss? Now I'm gonna put my stop loss at this high. Now, why did I put my stop loss at this high? I know that okay, the buyers tried doing something. When price came down, gave us this higher high, it was unable to close above this high. Okay, now there was a pull of this high here, giving us a sell. Okay, so now I have a specific place where I want to put my stop loss. Where would my target be? Where would my target be? Now, with this setup, 104K. And why I said that is if you go to the daily time frame, you see that a tweezer top candlestick has formed, which is a candlestick that signal back in an uptrend. Okay, it's called a tweezer top. Why the tweezer bottom indicates a reversal, so I saw a tweezer top on BTC earlier this morning with an indication that we might see some little pullback on BTC before going all the way up. Now, some traders might want to put their take profit down to this point. Market can actually run all the way down because it's a trade I have open currently. Okay, the markets can totally run down to this final target. Okay, but now as a trader, you might say, okay, I want to just target, let's say, I want to double tap the position tool, and then let's say you have an account size of, let's say, $1,000, okay, and then now you click your OK button. Now you can see the position toolbox has given me the quantity I need for this BTC trade to enter it on my exchange if I'm actually trading with token and not USDT. So if you're trading with USDT, is a whole different, but if you're trading with token, is a whole different thing altogether. So now you can see that I have an entry and an exit. Okay, so this is my target. This is my target. I'm targeting just a 1 to 3 ratio. Now, the question up to this point, okay, do you think he's greedy? It's an open question. Do you think that trader is greedy? A trader who's targeting, you know, 104, 500. Do you think the trader is greedy or he's aiming for an unrealistic target? I want to hear from you. Can you all still hear me, guys? If you can still hear me, let me know. Can you still hear me? Can you all still hear me? Okay, great, great. So, with what I was explaining earlier with my chart in regards to what Mr. X said about risk versus reward, okay? Now, I mentioned something in regards to this strategy. This is an uptrend, okay? The market has been moving in an uptrend for a while, and you know that there comes a point where the market is going to change to a downtrend, okay? And what's your confirmation? It is when the market violates the rule of this uptrend, which is breaking down to the downside. Okay, that's a breakdown to the downside. Okay, so there was an MMS here, which is a market structure shift, and then the market is likely to come back to this other block. Okay, it's likely to come back to this other block and then give us a sell. So as a trader, you now ask yourself, where do you put your stop loss and where do you put your target? You have $1,000 account and you want to risk $100, okay? But you want to know a specific place where you want to put your stop loss. So I said this high is an ideal place to put your stop loss. This high here, this very high here is an ideal place to put your stop loss. Why? Because if you watch the price action, you can see that after all this high, okay, so it broke down to the downside, giving us a market structure shift, okay, indicating that the sellers are coming in. It's able to close above this high, was unable to break above these two highs, and then the pullback occurred, okay, the pullback occurred, and then you see price coming back to that other block I mentioned and then giving us a sell. So now I have my stop loss, but what would my target be? So like I said earlier, okay, for me, I always target 1 to 3x. That's 1 to 3 RR. That means if I'm risking $100, I'm targeting $300. So if I'm targeting $300, this place should be my stop loss. This low here should be my stop loss. This low here should be my stop loss. If I'm targeting a 3x, okay. Now that 3x, I know it's very realistic. It's possible for the market to achieve it in regards to this trend. But where this downtrend is practically heading to is to 104 500 on BTC to take out all of this trend line liquidity. Okay, so now the question is the trader who puts his take profit at the first target and the trader who puts his take profit at the second target. Do you think the second trader is greedy, or do you think he's just aiming for the price action? And for the first trader that took 1 to 3 RR, do you think he's fearful or something? I want to hear from you all. On the understanding this helps you to know how risks. You must learn to choose your risk. You must learn to choose your reward. Most times the market might give you a setup that can achieve a 5x, a 10x. Okay. Now the question is, do you want to take that trade, or you're going to aim for a specific reward which you know is realistic? Which you know is realistic. Okay, so looking at this now, knowing that the first trader puts his take profit at the first target, which is here, and that the second trader puts his take profit at the second target. Okay, now the trader who puts his take profit at the first target, like following his trading plan, in the sense that he's willing to lose $100 and is aiming for $300, give him up to $600, which is a 6x. But why is he sticking to 3x? It is because he knows it is realistic and it is his trading plan. He risks one to aim for three. So when you talk about risk to reward, okay, you should ask yourself, what is an ideal reward you think is realistic in your setup? Okay. Okay. What do you? Yes, yes, Mr. Rex. Thanks for that, sir. You always have to look at what is an ideal risk and reward for yourself. And another thing is knowing where to place your stop loss. Now, do you see that I didn't just place this stop loss here? Let me zoom my chart. I didn't just place the stop loss here. Okay, I placed the stop loss here because there are a lot of confirmations. Okay, there are a lot of confirmations here that the market cannot break above this level, this very level here where I just circled now. Okay, there's a lot of confirmation that the market cannot break above it. What was the confirmation? Okay, so now you see there was a high. Remember, the market was giving us series of higher highs, higher lows in this uptrend. There was a high here, and then the market gave us a higher low. What are we expecting in this trend? We're expecting price to close above this previous high, give us another higher low, and then continue. But obviously, price was unable to close above that high. That's number one indication. Now there was a pullback. After the pullback, the market gave us another leg up, but was still unable to close above this high. Neither did it close above the other previous high. So I started going all the way down. So where do you think my stop loss would be? My stop loss would be at that first high, which the market failed to take out almost in almost 2 to 3 attempts. Okay, that's where I put my stop loss. It now tells me that the buyers are likely not to go above this level for now. So I took my entry at this other block and my stop loss at that high. So now where do you think my target will be? My target will be at a point where I think is very realistic. Okay, a point where I think is very realistic. Now, there are traders who would even aim for 1 to 2x. Okay, there are traders who would even aim for 1 to 2x. So, where's the 1 to 2x? If you're aiming for 1 to 2x, okay, your take profit should be here at this low here, this particular low here, this low here. Now, you see that the trader who is aiming for 1 to 2x already made his profit and walked away. Okay, he already made his profits and walked away. Okay, now the one who is aiming for 1 for 3 is waiting for the market to hit his target. The one who is aiming for 1 to 6 is waiting for the market to hit his target. So it's all about knowing what you're willing to risk and what you think is realistic. Now, the trader who aimed for 1 to 2 knows it's realistic. The trader who aimed for 1 to 3 knows it's realistic. The one who aimed for 1 to 6 also knows it's realistic, but it's all about your trading plan. What's your reward aim? What are you aiming to gain from this risk? So it's all left for you to choose. I don't know if that makes sense. I don't know if that makes sense. If it makes sense, please let me know, guys. And any more questions in regards to that? I said I wanted to know some of your challenges with your trading plan. Do you think it's your strategy? Do you think it's your psychology? Do you think it's your risk? Or do you think it's your emotion? Let me know, guys. That's why we're here on this live stream, to break that down and help you on how to fix it. Bring on your question, guys. I'm open for it. So, in regards to what I was saying, guys, oh, thank you so much, sir. Thank you so much, sir. So when you talk about risk to reward, okay, it's knowing where to put your stop loss. You don't just put your stop loss anywhere. I don't open a trade without knowing where to put my stop loss. Okay. Now I don't put my stop loss randomly. I put my stop loss at a point where I know it is very realistic. I put my stop loss as a point where I know it is very realistic. I don't put my stop loss as a point where I know it's not realistic. No, I aim for realistic stop loss. Okay, I aim for realistic stop loss, and I also aim for realistic take profits. Sorry, I aim for realistic take profits. Why I aim for stop losses that I know can carry my trades if there are drawdowns. Sorry, guys. So, any more question in regards to that? I'm open for it. Okay, thanks so much, Madam Lovett. Thanks so much. So, if you see very well, I dropped a trade on Solana. Okay, I dropped a trade on Solana, and I'll quickly explain that trade. I'll quickly explain that trade. Sorry, I'm gonna share my screen on Solana. Just a second, so that I can also explain that as well on Solana. Give me a second. Trying to open up my chart here. Okay, okay, I'm sure you all can still see my screen on Solana. Okay, on Solana, on the 4 hours time frame, I dropped this trade on the previous live stream. I dropped this trade on the previous live stream. Okay, and let me quickly explain something about this trade. So I have to share that again. Okay, so this is my trade on Solana on the 4 hours time frame. We took this trade earlier this week and running up in profits. How many X trade again? Let me check. It's a 1 to 3X, almost 4X. Let's just okay. Now, in regards to my strategy, I saw that the market was actually in a short term, a downtrend. That's more like a pullback. Okay. So I noticed the market was in a downtrend. Okay. And while it was in the downtrend, the market gave me a market structure shift here, indicating that the buyers are now coming into play. So after the market structure shift, I noticed that this other block here stood as resistance. Okay, it stood as resistance, and then this very other block here too is a potential buy area where buyers would like to come in, and you can see how price respected that. After giving us this, then all the way up. Now, where did I put my stop loss? I put my stop loss right at this low. Now, why did I put my stop loss at this low? Now, I put my stop loss at this low because I know very well, sorry, I know very well that this low is now a protected area. Okay, it's a protected area because it is the low that gave us that market structure shift. So there is no way the sellers are coming to take away this low. Given that it broke above it, it makes it very valid in the sense that the sellers are not going to take that out. Okay. Now, having said that, I someone said if they can still enter the trade, and I said I will look for. Let me show you what I did on the lower time frame. I came to the 30 minutes time frame. Okay, I came to the 30 minutes time frame, and what did I do? I also wanted to see the same thing. I also wanted to see the same thing. Now I noticed that this area is a resistance area. Okay, I noticed this is a resistance area, and I noticed that this other block is valid. And then there is, liquidity. Took the trade and I shared it on the WhatsApp channel. Why would it be at this high? Now take a look at the 4 hours time frame. You will see that this high is where you can see that my target is still at multiple rejections at that level. You can see multiple rejections, multiple rejections, multiple rejections at that level. Okay. So having said that, this is what I expect Solana to do. This high, come here, tap into this zone, and then give us this. I already dropped the signal on the WhatsApp group. Okay, so now why did I choose this stop loss? I already explained it. I already explained why I choose this area as my stop loss. It's very simple. It was the area that the market tapped back into. This is for 30 minutes time frame. It was the area the market tapped back into for that bullish continuation after the market structure shift on the 4 hours time frame. So there's a whole lot of explanation around this because it's the strategy I trade. But I just want you to understand that when you talk about risk to reward, okay, it's basically about knowing where to put your stop loss, where to put your exit, and all of that. Thanks, Mr. Rex. I appreciate you for being on the live stream with me. Okay, so any more questions, guys? Let me hear from you. Do you have more questions? Any more questions? Okay, guys. So to wrap it up, I was talking about fixing a broken plan. Okay, and I talked about how you can know if your trading plan is broken. You know your trading plan is broken when you start feeling frustrated, when you start feeling, you know, the doubt, the uncertainty, when you're not having confidence with your setup, you know that you have a broken trading plan. And all of this comes from not having a strategy that works. All of this comes from FOMO. It comes from, following people's bias without having a clear confirmation of price action and all of that. So fixing your trading plan is about going back to the basics. Okay, going back to the basics. First is finding a strategy that works. And for those who have subscribed to our paid course, okay, I'm gonna start on. Okay, Faith, you said you just joined now. Yes, to wrap it up, Faith, on today's live stream, we're talking about fixing a broken plan. Okay, most traders have a broken plan and they are yet to figure it out. Why do I say that? You see, most traders are now on the stage where they feel frustrated, where they feel doubt, where they feel uncertain, where they feel, fear in the market and all of that. And at the end of the day, you see they start gambling because they have a broken plan. If they usually take 2 trades in a day, you see them taking 5 trades because they now want to revenge the market to gain back their money. So all of these are signs of a broken trading plan, and we're talking about how to fix them. Okay, my boss, Mr. Will, said how to manage emotions. How to manage emotions. Now, how do you manage your emotion as a trader? First of all, I believe that if you have a strategy that works, it builds your confidence in your setup. It builds your trust in your setup. Okay. Now, this confidence comes from you trying out this strategy over time, either in backtesting or in the real life market. When you've backtested the strategy a lot and then you want to apply it in the real life market, you see that you'll be confident. Where does your confidence comes from? It comes from you knowing that, okay, I backtested on this strategy and it gives me a 70% win rate or 80% win rate. Okay, now it gives you that confidence to take that trade without uncertainty, without doubt. So I think managing your emotions as a trader is, first of all, having a strategy that works, because when you have a strategy that works, it builds your confidence in your setup, it builds your trust in your setup. Just like this trade I took on BTC, let me share my chart again. Just like this trade I took on BTC, okay, I didn't just take this trade in the sense that I just want to trade. Okay, I took this trade basically because I've seen this play out so many times. I've seen this particular setup play out so many times, even when I'm backtesting. Okay, even when I'm trading the real life market, I've seen this strategy play out so many times. So seeing this strategy play out so many times builds my confidence. When I see the same setup, it tells me that, okay, this trade is likely to play out. I've seen this before and I think it works. Now you see I have a strategy that works. Okay, so when taking the trade, I wouldn't be afraid. I'll be very confident and I'll trust my setup. That's number one. How to manage your emotion is by having a strategy that works. Number one, knowing that that strategy is effective, knowing that it is very valid. Okay, and that is when you tested on it and when you tried it out several times in the real life market. That's number one. And then number two is risking what you can afford to lose. Because I tell traders that when you reach what you can afford to lose in a particular setup, you wouldn't be, fearful, or you wouldn't be scared when the market is in drawdowns. Okay, when the market is in drawdowns, you're not going to be fearful. You're not going to be kind of like I want to close this trade. Now look at BTC. Let me show you something. Look at this BTC trade. Okay, you can see that when the market was coming to my entry, this was my entry. Okay, when the market gave this market structure, okay, but I was not scared. I was not fearful. Okay, because I know that this strategy works. Okay, and not only that, I know that I'm also risking what I can afford to lose. So managing your emotion, first of all, is about having a strategy that works, and number two is risking what you can afford to lose. Because when you don't risk what you can afford to lose, you're going to be fearful when the market is in drawdown. You're going to be like, oh wow, I'm already 50% down on this particular position. Won't I just close up my trade and walk away with what's left? You see, that's where fear comes in. All the emotion comes in. So to manage your emotion, first of all, find the strategy that works. Number two, manage your risk. Make sure you're risking what you can afford to lose. Have a good risk management plan. Okay, have a good risk management plan. And number three is having a realistic target. Having a realistic target. If you don't have a realistic target, you're gonna be scared if this market is gonna get to the final target, just like this trade on BTC. Okay, now to clarify you more on this trade, where I'm actually aiming for, okay, is 105. I think it's 105, 105 400 on BTC. All this target. Okay, I know fully well that the market is coming to take out all of this trend line liquidity here. Okay, now the question is, as a trader, can you hold this trade down to the final target? Let me remove this. This is the final target. Okay, can you hold this trade down to the final target? That's another question. Okay, so I think when you have a realistic target, okay, you need not to be afraid of closing your trades too early. Now, if I want to be very conservative with this trade, I know that 105 400 is the target of BTC with this pullback. Okay, but I will choose to put my take profit at a 3x, which is at this point. Okay. Now, why did I choose that? I choose that because I know it is very realistic. I know it is very realistic. So, with that being said, I know that the market is definitely going to get to this point. Now, at the point where the market is now, most traders will be like, man, I think I'm already up in enough profit. Why don't I close the trade? Now, for me, instead of closing the trade, I would rather move my stop loss to my entry. That's break even, and I'll let the trade run to my final target. So the thing is, I don't cut my winners short because I know my target is realistic. So being able to deal with your emotions is practically one, having a strategy that works, two, risking what you can afford to lose, and number three, having a clear entry and exit plan. It helps you not to close trade during drawdowns, and it helps you to hold your trades to their final target. It helps you to hold your trades to their final target. So that is practically how you can manage your emotions. I hope that is clear, boss. If there are more questions, you can bring it up, guys. I'm open to answer your questions. So back to you, Faith, with what you were saying. Um Basically, today we're talking about fixing a broken plan. So for you to know that you have a broken plan is when it's basically when you're consistently losing money despite following your rules. That's when you know that you have a broken plan. Number two is when you deviate from your plan out of frustration or boredom. Okay, let's say I choose to trade two times in a day. Okay, and then I've traded two times in a day, and let's say maybe I lost that two trades, and now I'm feeling bored. Okay, I'll be like, oh, there are still many hours before the day runs out. Let me look for another trade. Okay, and when I look for that trade again, I might lose again, and then you see I become frustrated. In that frustration, I'll now take more trades, which might cost me more losses, and that's a practical plan of that's a practical picture of breaking your trading plan. Okay, so another way to know that you have a broken plan is when you're emotionally drained or overly impulsive. And emotionally drained comes from losing streaks. Okay, when you've lost a lot or when your strategy isn't working for you and all of that. And another way to know that you have a broken plan is when your strategy no longer fits the current market condition. Okay, when your strategy doesn't fit the current market condition. I hope this makes sense, guys. If you have more questions, you can bring them on. I'm open to answering them. Boss, I hope I answered your question on how to manage your emotions. I said it's basically having a strategy that works, risking what you can afford to lose, having a clear entry and exit points. This helps you stay very disciplined and it makes you know that this works. And when you find yourself taking new trades again, you keep to the same thing, it becomes a habit, and you see you wouldn't be dealing with emotional stress and all of that again when trading. I hope that makes sense, guys. If there are more questions, please let me know. I'm open to answer your questions. If there are more questions, please let me know. Any more questions, guys? Please let me know. I'm open to answer your questions. You're welcome, Faith. You're welcome, Faith. Any more questions, guys? I'm open to answering your questions. Okay, if there are questions, you can put them in the chat box. I can see all of the chats from here and then I will answer them directly. So, to wrap up the stream, how do you actually fix a broken plan? Okay, now what you have to do is look back at least your last 10 to 20 trades. Okay, listen carefully. How to fix your broken trading plan is look back at least your last 10 to 20 trades and then ask yourself, did you follow your plan or you broke your own rules? Did you follow your plan or you broke your own rules? Now, being able to look at those 10 to 20 trades and knowing that, okay, I broke my rules or I kept some and I broke some brings you up to that point where you start realizing where the mistake is coming from and how you can actually fix it. So, how to fix your broken trading plan is look at least your last 10 to 20 trades. Ask yourself, did you follow your plan or did you break your own rules? And then number two is were your entries and exits based on clear signals? Were your entry and exit based on clear signals? Because one thing about traders is you see BTC is going long, okay, and then you see some random signal somewhere, enter BTC long now and put stop loss here, put take profit here. Now the person is putting that based on their trading pattern, based on how they understand the price action, and this is what benefits you as a paid club member in the World Club Pro. Okay, because we're going to bring you up to build that strategy. We're going to bring you up with a whole lot of things, entry, exit, risk management, and all of those things. Okay, so fixing your broken trading plan is number one. Looking at your previous trades to see if you followed your plan or you broke your own rules. Number two is knowing whether your entries and your exits were based on clear signals, if they were actually okay, if your target was realistic, if your stop loss was very okay in case if there are drawdowns on the market. And number three is, did you over leverage or did you revenge the trade? Did you over leverage or did you revenge the trade? Another one is, did the market conditions suit your strategy? Now, being able to look at all those things will help you fix a broken trading plan, because a broken plan often marks emotional or psychological issues. So journaling them reveals the truth. This is why journaling your trades is very, very important for you as a trader. It's very, very important for you to journal your trades. I hope this makes sense, guys. If there are questions, please let me know before wrapping up the live stream for today. I talked about how to spot a broken trading plan and how to fix a broken trading plan. I hope this makes sense, guys. If there are more questions, please let me know. If there are more questions, please let me know, guys. It's been a wonderful live stream already, and I appreciate you all for hanging on here with me. This is a very important topic because so many traders are suffering from this. Okay, they have a broken trading plan and they still don't know it yet. They come up to their chart every day with frustration. they come up with uncertainty, they come up with doubts, they have no confidence or trust towards their setup or towards their entry and their exit. They are just there gambling. And at the end of the day, they get wrecked, they blow off their money, and they come out to tell you that trading doesn't work. It actually works. Okay. The thing is, you have a broken trading plan. And how do you fix it? I made mention of that. Go back to your previous trades. Go back to your previous trades. And when you go back to your previous trades, what do you look at? You look at if you followed your trading plan or if you broke your own rules. Now, let's say, for example, you're the type that said, I'll always take two trades per day and I'm going to risk 1 to 2% for my trade on my portfolio today. Okay, I'm taking two trades per day and I'm risking 1 to 2% of my account size today. And when you check your previous trades, you'll be able to see that okay, on this day I didn't take only two trades. I took 4 to 5 trades, and I took those trades out of frustration because I wanted to revenge the market and take back my money. Now you see where the problem comes from. Okay. Number two, you check your entries and your exit. Was my entry point very okay? Was my exit point very okay? Was my target very okay? Now, being able to do that helps you to find a way to fix that broken plan. Okay. Another one is also check your leverage. Did you over leverage or did you use a reasonable leverage? And also, the most important one, if your strategy suits the market condition. So looking at all of these things helps you to fix your broken trading plan. Thanks so much, guys. Yes, boss. I hope you were clarified on that. So it's been a wonderful live stream, guys. It's been a wonderful live stream. And for those who have subscribed to our Futures Trading Masterclass course, who are now a full member of the World Lab Club, please do well to engage on the Discord platform, which is where I'll be taking you guys on, and I'll drop an announcement. Pay attention to the Discord channel in the pit where we always interact. Pay attention there. We have a live stream tomorrow. I'm gonna drop the details. It's something you wouldn't want to miss because it's where we're gonna start with bringing you up on how to trade like me, bringing you up on how to, develop that strategy, your confidence, your profitability, and all of that. Okay. So, those who have subscribed to our Futures Trading Masterclass course, do well to interact on the Discord platform. I'll be there waiting for you all. And tomorrow we'll kick off with our, full introduction to trading futures and how you can implement that trading approach in other markets as well. So, thank you guys. If you haven't subscribed to our Futures Trading Masterclass course, there's still an opportunity for you to do that. DM an admin in our WhatsApp channel, to guide you on how to get on board. And trust me, it's something you wouldn't want to miss out on. So thank you so much, guys. I really appreciate you all for hanging out with me here. See you again tomorrow, 1 p.m. Lagos time. It's still gonna be an insightful live stream, and it's really gonna keep helping you to shape your trading journey. So thank you so much, guys. See you again tomorrow.